Um, so you are fortunate to have Jordana LaPorte here today. And part of the fortunate thing is we kind of changed things up from what she's done in the past with Buzz on Biz. We used to have her talk about profit and loss statements and balance sheets, which are not the most exciting part of the business, but something that you need to have a little bit of exposure to. So in another week or so, I get to cover a little bit of that, and I will just gloss over it lightly because we found that for this class, it's not as important as some of the other things. I've known Jordana.
Which is sort of sad because
Yes.
in the real world, it's one of the most important
It's
things.
one of the most important things for business. But probably more importantly is I got to know Jordana quite well 10, 12 years ago when we were starting the coffee shop. And I started out working with an attorney and figuring out all this stuff that we thought we needed to know and get our organization structure put together. And then I went and met with Jordana and found out that I should have started with a CPA or an accountant before I went to the attorney to learn about what I really needed to know about things like taxation and payroll and stuff of that nature. And Jordana helped us through it. So for the 6 years that we owned the business, we used Jordana's office for doing our payroll as well as making sure that we weren't getting in trouble with not paying taxes and things of that nature. So Jordana's going to tell you a little bit about her business and maybe some things that if you're starting up a business, you probably should know before you get started. So Jordana LaPorte.
Thank you. So I am a certified public accountant, or CPA. One of the questions, I've got 4 more questions here from Dan, and one of those was about my business and my education. So I have a 4-year bachelor's degree from the University of Washington in accounting. I went on to get my master's degree. In order to be a CPA now, you actually do have to have 5 years of a bachelor's in your bachelor's degree. Not necessarily all in accounting, but for some reason they think that 5th year is very important to you. Most accountants now go on to get either a master's in business or a master's in accounting, or such as myself, I have a master's in taxation. That'll bore you to tears. I have been working in the Chelan area for a little over 20 years. About 17 years ago, I bought my own practice here, and I mostly work with small business owners, individuals, primarily doing tax work, filing all your payroll taxes, your state tax stuff. There are a lot of different taxes that most of us don't know about. Have any of you filed a tax return? You ever had a job that you've had to got a W-2 and had to report? Nobody's had to do a tax return yet. Well, lucky you. Someday you will. Part of what you'll see is you'll have a lot of payroll taxes that come out of that. You kind of wonder who Mr. FICA is, who's taking about 7 or 8% of your money. That's money for your retirement in the future is what we hope through Social Security. So that's pretty much what I help my clients do. And as far as the major challenges that I see in new businesses is truly lack of planning. So that's one of the reasons why I really love this class, because you guys are taking what you consider a dream and turning it into a plan. And most people who start their businesses just have that dream. They think, oh, this is going to be easy. I'm going to make money hand over fist. I'm going to find people to help me. It's going to be really easy. I've got a great idea. But the reality is they don't plan. They don't get a good accountant. They don't necessarily go see a good attorney. And then they end up with mess in their books and they don't know why. Or they get a really nasty letter from the Internal Revenue Service that says, oh, by the way, you owe $40,000 in back payroll taxes and interest and penalties. And those are pretty disheartening things to get when you're still struggling to make sure you're getting all your rent paid and your employees paid and all that. So your accountants generally will sit down with you and help you plan and budget. And I know Dan said he was going to go over a budget later. Boy, I have a hard time talking with this on. Going over a budget later, tomorrow, I guess. To me, the most important part about being a business owner and doing a budget, and this is true even if you're your individual family life, a budget is when you tell your money where it's going to go instead of wondering where it went later in life or later in the month. So it's very important to understand that you've got certain fixed costs, rent, utilities, certain amount of payroll, and then you have a lot of inventory and things like that you need to plan for. So that's probably one of the other challenges is when you're new to this game, it's a big trust factor. You need to find people that you work with that you trust, because you're not going to know everything, and you have to trust that they do. Trust but verify. So it's good to get, references from that accountant, talk to maybe other clients. Most of my referrals come from other clients that say, hey, that gal's a good gal, go use her. So budgeting, big one, trying to go cheap. If you're hiring a bookkeeper for $15 an hour, you are getting somebody who knows how to write a check. And that's all they really know. So you need to, spend the money to get people who do it right. Because at the end of the day, it will save you a lot of money. I've been in many situations where people did not understand that, a certain tax was due, and then we get a notice from the state that says, you owe all this money for L&I because you didn't report it under the correct rates. I actually recently got a client that called me and said, I have a little problem. I didn't realize that the sale of all my puppies was something the state would be interested in. So she's breeding golden retrievers, selling them. Dogs right now are going for a pretty good premium, $3,000 to $4,000 a piece, purebreds. Well, that's subject to sales tax. Guess how the state found her? I think the class before was doing web pages. That's how the state found her. She's advertising on the web that she's got puppies for sale. And, you figure a $3,000 puppy is $240 in sales tax. The state was pretty happy to find her, and that's how they did it. Most of the services that we provide for people, small town like this, is payroll. Kind of paying to do all that by for yourself. There's so many different taxes, so many new taxes. So I usually have this written down. For every dollar that you're paying someone, there's at least, depending upon the business, another 30 cents that you're going to pay to the state or the federal government in payroll taxes. And that's a pretty big number. Some of this is pushed back to the employee. Maybe you've heard about the Family Leave Act. In order to be able to stay home with people who are sick, or if you've had a baby, or your wife's had a baby, you get to stay home, you can collect on this Family Leave Act, but you are paying into that system as an employee now. There's a new one that's for short-term care. They want to take care of us when we're sick, but we're paying for that now. So that's a big thing that I do, and obviously federal income taxes. We want to make sure people stay out of the state. They always say there's nothing sure in life but death and taxes. And you file a tax return even when you die. So it's a sort of a necessary evil. My job, I consider it's a necessary evil for most businesses and most individuals. You wanted me to talk about computerized systems. Computerized systems are great as long as you use it. There are a bajillion out there. You probably heard of QuickBooks. There's Gusto. I think they call it FreeBooks, Peachtree, many different accounting systems. But unless you actually use it, it doesn't do you any good. So it's one that you'll understand, one that integrates well with what you're doing. If you are going to be in a retail business, one of the biggest things that you can buy is what they call point of sale system. So point of sale is what tracks your inventory and does all your pricing. When you go through that cashier at the end of the day and they're the barcodes, that's a point of sale system that is tracking that sale for you and telling you as a business owner how much you sold, how much in taxes you collected, and now how much you have to pay over to the state. Some point of sale systems integrate very well into an accounting system, and some don't. So you kind of have to do your research to figure out what you need and what would work well with what you do. The only main suggestion I have, how many of you are Mac users? You like Apple products? Yeah? Macs are the worst for accounting software. Right brain, left brain. Macs are all about being creative, listening to great music, doing pretty pictures. PCs are all about Excel, spreadsheets, doing the math. And accounting is math at the end of the day. It's easy math. You add, subtract, multiply, and divide. but it's still math, and max is completely kind of weird, but wouldn't even bother. The other thing about your point of sale systems that you're gonna want to use, you're gonna take credit cards, right? Everybody wants to use a credit or debit card, right? Significant fees, as much as 3% and then an amount per transaction. So when you're looking at point of sale systems and looking at taking credit cards, those are things you have to compare, is what are the fees. Now I'll give you an interesting story because we're starting to hear this from the restaurants in town. COVID, created a bizarre situation where very few people could go to restaurants, and those that did tended to leave really good tips. My daughter works at a restaurant here in Manson. Came home one day, says, wow, we had a $400 table, but they left a $1,000 tip for the waitress. Yeah, $1,000. Well, now what's happening is that restaurant tours are realizing, because that's not their money, that's for the waitress, right? That they're paying 3% fee on the $1,000. So that's $30. You take that out of a $100 dinner, all of a sudden the restaurant lost money because somebody made a big tip to the waitress. Nice of them, but we don't think about those things until they start to happen and start to become a problem. So now what I'm hearing is a lot of restaurants are saying, yeah, we're gonna take those tips, but you're only gonna get 97% if it was on a credit card. Fair? I think so. Why should the restaurateur eat that? In our state anyway, the states are different. Some pay different minimum wage for waitresses. Ours is full minimum wage. So, but as a business owner, that caught some people off guard. The significance of those dollars going through in tips on a credit card. So those are things that if you have a good accounting system and you are tracking things well, you will see it quickly. All of a sudden in July, you wonder why you're paying your credit card company $3,000 or $4,000 more than you're used to. And you can look at your books and see, and then you can make a change. All right, well, we need to take that in consideration when we're paying the tips out. So a lot of little things like that, are what your books, your profit and loss, your balance sheet, things you'll learn about later, but they tell a story, or they tell me one. And I can say, I can ask you, what about this product that you sell? How quickly is it turning through your inventory? So if you've got something that sits on the shelf, you're not making any money off it, but you think it's something people want, but it's not moving. But you look over here and you go, that's the stupidest thing I've ever seen in the world. Any of you remember Beanie Babies? Mm-hmm. Yeah, those things flew off the shelf. $5, $6 a pop. Everybody's like, what? People made fortunes selling Beanie Babies at stores. It was the only thing that was moving in their store because everybody went on vacation and bought a Beanie Baby wherever they went. In my case, I was feeling kind of guilty about getting divorced. I had this little card shop, bought one every week for my son, at lunchtime. Those things flew off the shelf. They might have the nice Christmas ornaments that sit there and sit there and sit there, but it's finding that product that moves that makes you money. And your point of sale system and your accounting system will tell you that. So I didn't pay attention how much time I actually had. Any questions? I love stories.
You've got a little bit of time left.
I can talk about anything.
But they will come up with it. Each one will come up with a question, I'm sure.
Well, my favorite statement, my favorite client tells me, I don't care what you do, Jordana, just keep me out of jail. You can go to jail for not paying your taxes. It's not very likely. Was it Al Capone? He actually went to jail for taxes, not for murdering people. But the government has many ways to try and find you. For example, if you don't file a tax return and your employer sent in the W-2s, now the IRS knows you had income, so you didn't file a tax return, they're gonna come look for you. Not literally, but you'll get notices, you'll get, and it just escalates at a business level, because now all of a sudden, when I take in that money for your payroll taxes, that's the government's money. It's not mine, it's not yours anymore. And they get really mad when you take their money. So they have pretty high penalties, 100%. So you could have not remitted over $10,000 in payroll taxes, and now you owe them 25 because of penalties and interest. Anything? Sure. Sorry?
Do you have any competition?
Do I have any competition? Yes. Matter of fact, I merged my accounting firm with another accounting firm in Cheyenne, Evergreen, so I now work with Evergreen County. There are three or four other CPAs in Cheyenne. But I will tell you this, there's not enough of us. I have no loss of trying to find work, need work. I have more work than I'm trying to retire and I can't do it. So, there's Wenatchee accountants, and then there's people who still go to Seattle. So, I've had clients in China, Israel, all over the United States. So the nice thing about my job if you're, as a career, it's very portable. You can be anywhere, and with COVID, we've all figured out we can do almost anything from our homes. So I can certainly do my job from home if I had better internet service, which I don't. So, anything else?
If your clients are farther away, do you have to go to them, or do you just work from home?
The technology's great. I could Zoom, phone call. I've got a lot of clients I've never even met. We talk by phone. They send me stuff. Everything can be scanned and sent. A lot of stuff comes by mail. They drop it off. Whatever. Generally speaking, I will at least have had a meeting or a phone meeting with someone before I work with them. But after a few years, they trust me. It's mostly phone. Sometimes it's just a quick note when I'm done. Thanks for coming again. But yeah, I do go out to clients quite a bit. For different reasons. I'll go out to their place of business to look at their, computer systems, their books, meet with their attorneys. The other thing of doing what I do, a lot of accountants use this as a stepping stone to buy their own businesses. I've had other CPAs that I've known, worked with, that, they'll get to working with a client and they really just like that business and become very, passionate about it and buy in and make good money doing that. And actually my favorite story was a guy who, this is a long time ago, well before probably some of your parents were born. We thought it was all really weird that he was gonna go do computers with this new little startup company. Because, he's on partner track. He was probably gonna make at least a couple $100,000 a year. But he went to work for Microsoft. I probably ran into him about 6 or 7 years ago. He had bought a $5 million house, on the water.
Wow.
So, sometimes you can use this job as a very good leaping into another thing, but yeah. When I worked at KPMG, which is a very large accounting firm in downtown Seattle, and this is 20 years ago, the regional partner made $1.2 million a year. So there's a lot of money in what I do, depending upon how far up the chain you go. And frankly, at this point, for women, it's probably a better career than for men. So, oddly.
So a couple of the businesses that are in here, one is a tattoo parlor called the Ink Stop. So with that type of service business, are there particular things that you think of from
Have
accounting
really from an accounting side, have really good insurance. That would be probably one of my first is, know that you have the right kind of insurance. From an accounting standpoint, it's still a service, so I'm not aware that that's a sales taxable service. That's an interesting comment. Your hairdresser doesn't have to charge sales tax, but your lawn mower guy does. So usually if it is to a person's body, then it's not a sales tax deal. And that makes sense to me now that I say it that way. Tips would be a big thing, because I would assume that the artists typically will get a fair amount in tips if they, doing a good job. So then you have to track that. You're supposed to know how much they got in tips. You have to pay the taxes on the tips money. It comes out of their money too, but that's something they're supposed to tell you about. And you can get in trouble if they think you're not reporting that income as the employer. And that's what's true for restaurants. And this has come up recently because most of what the IRS decided on restaurants' tips was based on high-end New York restaurants. So, that doesn't really fall to coffee shops. You're not going to expect 25-30% tips on a cup of coffee necessarily, or a small coffee place. But the IRS will use those kinds of analogies to figure out what somebody should do. So currently they assume, as a restaurant, that you will have it, of what your gross revenue is. Let's say your gross revenue is $200,000. They will assume that 8% will come out as tips. And if you're not reporting that, then they're gonna wonder why. They might not wonder hard enough to come look at you, but they have that information. Other businesses?
I know that there's a dine-in theater, so this group's doing a kind of a theater with dinner.
So theater with dinner, so now we're food, so that is sales tax. You're gonna collect sales tax and tips. Ticket price on the movie theater includes sales tax, I believe, but the food certainly does. And again, when you collect that sales tax, you're collecting that in trust for the state. So the number one reason a restaurant goes out of business is failure to pay sales tax and payroll taxes. Because that's not your money. You need to set that aside so that it goes off to its appropriate. And again, you're gonna have tips. So you gotta somehow figure out how your employees tell you that they've received the tips.
And my guess is it would certainly be a lot of credit card
A lot of
for
credit card.
that,
Yep,
so that's
yeah.
a big
And
consideration.
I think it is a reality, especially with COVID. All of a sudden the coffee shop says, I can't take your credit card for my $3 coffee anymore. Oddly, they could take my dollar bill for a tip.
Mm-hmm.
But most of us are doing business, with our debit cards and credit cards. And the downside for you guys, unfortunately, is you've got your bank account and you get all that on your phone and you see the amount coming in and the amount going out, so you don't learn how to actually reconcile your accounts. The amount of times that banks make mistakes would astonish you, where they put the wrong amount of money in, or something didn't clear for the right amount. So at some point you need to learn how to reconcile that out.
A personal example, when we had the coffee shop, we had, just by chance, 2 days in a row that had the exact same amount of deposit, cash deposit, that we made to the bank. The bank said, well, we've been having some problems with our system, so we thought that that was a duplication. So they didn't credit one of those, which was about $1,100, which, during July and stuff, that was, pretty good day's business. If I hadn't been looking at that and reconciling them, I would have, easily lost $1,100 because the bank got the money, but they just thought it was a duplication.
So to further on that, I had a client that had a point of sale system. It tells you how much money you've taken in, how much should go to the bank. To be fair, this was actually not a very good bookkeeper. Then we had the amount that was going into the bank, the deposits that were going into the bank. Those two things weren't matching. So this point of sale system is saying, hey, you're collecting, let's just say $4,000 a day, but we're only depositing $3,800 a day into the bank. The manager was taking the difference. But because the client didn't reconcile his stuff between those two things, he didn't know about it until she'd gotten away with about $30,000, $40,000. So it is important to stay on top of your stuff. Because I usually say this to owners when they feel like something, they don't feel like something's right. Tell me why. Because usually it's that feeling, it's that gut reaction that, I should have more money, we're doing more work. I should see more, I work with the hospital. We should have more money, we're seeing more patients. Well, if you don't code, then we don't get the money for the patients you're seeing. So there's always a reason why something's not happening, especially when you have that gut reaction of, I'm pretty sure things are working out better than this, but anyway.
So this group, I've forgotten what your
Like a gym.
the gym,
Yeah.
and then that's the
The
Chelan Manson Fuel or
Lake Chelan Field.
Lake Chelan Fuel Fitness. So a fitness club, what are some of the,
So that's sales taxable too. Your membership dues are sales taxable. And then you get into pricing because you've got competition. So are you gonna undercut them? Then you can't maybe buy the machines. You've got questions, am I gonna buy machines? I'm gonna lease machines. Am I gonna turn those machines over really quickly, so I don't wanna own them, because there's always a newer, better elliptical coming out, you know, the next day. I think the biggest thing for you is determining how many memberships do I actually have to sell in order to cover my fixed costs and make a profit that I'm, you know, wanting to make. And if you, depending upon what your fixed costs are, you could say, well, I think I'm only gonna get 100 members. Well, now all of a sudden my membership fees need to be $200 a month instead of $50 a month. So you really have to work with what are your fixed costs, how many members do you need at what rate you feel the market will bear. So.
And there's a little bit of competition.
A little bit of competition. So yeah, it's you know, you don't have to be the cheapest person in town to just take people, to get people's business, but you have to do something that other people don't do if you are more expensive. You know, it doesn't do me a lot of good here to say I used to work with a lot of mergers and acquisitions when I was in Seattle as an accountant, because we just don't have a lot of mergers and acquisitions. This is where other companies buy, big companies buy each other, right? A lot of tax planning that goes with that. Yeah, we don't really do that a lot in Chelan and Manson. So you have to be careful. There was a group of the kids in Brewster, I think, that wanted to do a tattoo shop in town, right? In Bridgeport, I think it was. You know, you have to have a certain amount of people that live around you that want to have a tattoo done, unless your artists are so good, people are coming to you. So promotion is a really big issue for you, because you've got to establish that you're better than the tattoo shop in Spokane that they can just walk next door to. So where do we get? We got from gym to, what are you guys doing?
Shoe store.
Shoe store. So inventory is a huge issue, because if you don't sell it by the end of the season, nobody wants last year's shoes, right? So you really have to monitor what's going in, and then determine when's the time to put it on sale and just get it out the door. You know, a lot of people say, well, I don't want to sell that for $5 because I paid $20 for it. But if it never sells, then it's just sitting there, it's not making you any money. And you gotta get rid of it to be able to get the next product out there. So watching how fast your inventory is turning, and honestly having a good eye as to what will be in style, because things are done so far in advance. You know, who wants to wear a blazer with a rotary on it? You know, it's a specialty.
So, I guess any opportunity for questions, because this is your last chance to ask Jordana a question. Otherwise, you're stuck with me for tomorrow. Jordana, thank you. We appreciate it.
I'm gonna go do some tax returns.
Great.
Oh.